Hello everyone, my name is Yaman Tazdavar and I bring you daily updates on Tesla, tech, and the markets. Welcome to Tesla Live. Let's get started. Markets are mixed today. Nvidia is leading the pack. It's up 4.3%. Everything else is pretty much down except for maybe Tesla a little bit, up 2%. We're going to look into Nvidia earnings. We're going to look into Salesforce earnings as well, and a few articles about macro, tariffs, and then Tesla. Let's get started. Let's start with the article of the day. S&P 500, NASDAQ advance as NVIDIA jumps. Spotlight on Trump tariff block. S&P 500 and NASDAQ rose on Thursday, boosted by NVIDIA after the AI chipmaker posted strong revenue growth, while investors also assessed a federal court ruling that blocked most of US President Donald Trump's tariffs. NVIDIA added 4.8% after reporting a higher than expected quarterly sales growth, driven by customers stockpiling AI chips ahead of US export restrictions on China. I think this part is speculative. We don't quite really, that's not what management said, I don't think. Listen to the earnings call. I didn't see anything to that end. And also, this part is a little misleading. Higher than expected quarterly sales growth. The expectations came down very significantly in the last 3 months. So I was looking back at my DCF forecast from 3 months ago, and NVIDIA missed both on top line and the bottom line on those two. I'm going to publish a revised forecast on Seeking Alpha, and I'm going to share that article when it's published on my X profile. This livecast is being streamed on X and YouTube simultaneously. Let's continue. The company, however, warned that the new curbs are expected to cut $8 billion from its current quarter sales. I don't know if that's exactly what they said, but okay. If there's a larger takeaway from this earnings announcement, by the way, this $8 billion figure is a management estimate, and they didn't provide any sort of support for it. So we're taking their word for it. So sometimes I see people adding this back in and saying, well, if this was in there, they would have handily beat the estimates for next quarter. I don't think it's as straightforward as that sounds. If there's a larger takeaway from this earnings announcement, the demand they're seeing everywhere else in the world balances those restrictions that are in place, and it seems like there might be more to come, said Keith Buchanan, senior PM at Globalt Investments. Philadelphia Semiconductor Index rose in the wake of NVIDIA results, last up 1%. Stocks, however, were off their session highs as investors assessed a U.S. court decision which invalidated with immediate effect most of Trump's sweeping levies imposed since January. The court decision, however, did not address some industry-specific tariffs on automobiles, steel, and aluminum. Kevin Hassett, the White House economic advisor, said 3 trade deals were nearly done, and he expected more despite the judgment. I expect this uncertainty to go on for a long time, for several months, if not several quarters. We already reviewed this data. We're going to dig into Salesforce. Its shares slumping 6%. I think it was up earlier and then kind of dived. So we're going to look into why that is. As the enterprise software provider raised its annual revenue adjusted profit forecast. Most mega cap and growth stocks lost steam, with Apple, which Trump threatened with tariffs last week, now up only 0.1%. Boeing climbed 3.3% after CEO Kelly Ortberg said the plane maker aims to increase production of its best-selling 737 MAX jets to 42 aircraft per month in the next few months and boost output to 47 a month in early 2026. 8 of the 11 major S&P 500 subsectors rose, with IT and real estate being the biggest gainers. S&P 500 is currently up about 3%, currently about 3% below an all-time high touched on February 19, rebounding from a nearly 19% decline earlier in April on easing trade tension, strong earnings, and subdued inflation data that aided risk appetite. May has been a solid month for equities, with both S&P 500 and Nasdaq on pace for their best monthly performances since November 2023. A second reading from the Commerce Department showed GDP contracted 0.2% in the first quarter. Economists polled by Reuters had forecasted 0.3% contraction. In other earnings, Best Buy dropped 10% after the electronics retailer lowered its annual comparable sales and profit forecasts amid concerns that US tariffs would weigh on consumer demand for big ticket items. Advancing issues outnumber declines by 2 to 1 on NYSE, 1.4 to 1 on NASDAQ. Okay. Let's continue, dig a little deeper into NVIDIA. Let me just check one thing real quick. All right. If you get a chance, please like, repost, and share this video with your followers. Thank you. NVIDIA shares rise as sales hit from China export curbs, not as bad as feared. NVIDIA beat quarterly sales expectations as customers stockpiled its AI chips before fresh US curbs on China exports took effect. But the same restrictions will slice off $8 billion in sales from the company's current quarter, forcing the company to offer a forecast below Wall Street estimates on Wednesday. Shares of the world's most valuable semiconductor firms still rose 5% extended trading as investors digested news that the hit in the current fiscal second quarter was not as bad as feared. And NVIDIA talked up demand for its new Blackwell chips from customers, including Microsoft. I think they said hundreds of thousands. And that's still in line with my forecast from hyperscalers' demand slowing down. The stock is relatively flat so far this year compared with 2024, when the shares nearly tripled in value. NVIDIA now faces trade restrictions on what it can sell, and the AI data center market is also maturing. Washington's year-long effort to thwart Beijing's access to top-of-the-line US technology have resulted in stricter restrictions on the export of NVIDIA's AI chips, stifling the company's access to one of the largest markets for semiconductors. Midway through a conference call with analysts, CEO Jensen Huang made impassioned remarks about US-China policy, saying that NVIDIA was at risk of being cut off from China's massive AI developer base and arguing that China's chip industry was sophisticated and closing in on US dominance. But he praised US President Trump's recent move to rescind a so-called AI diffusion rule that would have regulated global flows of US AI chips. President Trump wants America to win, and he also realizes that we're not the only country in the race, Huang said. Huang told analysts that NVIDIA's Hopper chips could no longer be modified for the Chinese market, but did not comment on its Blackwell chips. Reuters has reported that NVIDIA is preparing a Blackwell variant for the Chinese market. Though unlikely to make up for the loss in Chinese revenue, a spate of new deals that NVIDIA signed earlier this month in the Middle East could offer fresh avenues for growth, including the first phases of a 10-square-mile data center site in the UAE that could eventually use 5 gigawatts worth of AI infrastructure. The company has also announced similar deals in Saudi Arabia and Taiwan. They're not that similar. I think Saudi Arabia deal is an order of magnitude smaller, and so is the Taiwan one. And I think the UAE one is still in kind of negotiations. It's not really finalized. There aren't that many data centers right now that's going to be bigger than 1 gigawatt, is what I'm kind of gaining from my research. And the tens of gigawatts of data centers in the near term, I think, is limited by several factors. We have a line of sight to projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not too distant future, NVIDIA CFO Colette Kress said on the conference call. So I guess this is really the crux of the bull bear thesis. What does she mean by not too distant future is debatable. I think we're talking 5-10 years out, if not 10 plus years. Maybe they're thinking 5-10 years. Maybe I'm thinking 10 plus years for tens of gigawatts of AI infrastructure, NVIDIA AI infrastructure. So we'll see about that. But in the shorter term, restrictions on China exports will hurt. Kress said data center revenue in that country declined. US restrictions on the sale of NVIDIA's H20 chips to China, the only AI processors it could legally export to the country, prompted NVIDIA to disclose in April that it expected a $5.5 billion charge, while Huang had in May pegged the revenue impact related to restrictions at about $15 billion. Well, this is an inventory. This is an inventory charge. This is a revenue charge, potential revenue lost. So these are not apples to apples comparisons. On Wednesday, NVIDIA said the actual first quarter charge due to H20 restrictions were $1 billion less than expected because it was able to reuse some materials. So this is also revenue. Inventory. It said it lost $2.5 billion in H20 sales in the first quarter and expected to miss $8 billion in the second quarter. I mean, this is, I think, extremely speculative and kind of irrelevant. But people, NVIDIA will seem to rely on it quite a bit in their takes this morning. However, NVIDIA also said the H20 brought in $4.6 billion in sales in the first quarter, that China accounted for 12.5% of overall revenue in the first quarter. Gil Luria, an analyst with D.A. Davidson, said the overall impact of the H20 restrictions was less than feared. There was a removal of some China revenue from the July quarter guides, but there was also China revenue that was pulled into the first quarter. Chinese buyers were stocking up on H20 ahead of the restrictions, which is what propped up the April quarter, Luria said. Though major cloud companies such as Microsoft and Alphabet have stood their ground on the billions they have earmarked for this year for spending on expanding infrastructure or AI data centers, I think this should be tens of billions. Worries about such spending persist amid rapidly changing global trade policies. On an adjusted basis, NVIDIA earned 81 cents per share in the first quarter. Analysts estimated varied widely, etc. Again, the main point here is that these estimates have been coming down extremely fast in the last 3 months for NVIDIA. And then there's also a huge gap between what I expect for next fiscal year and what the street expects for next fiscal year. I think the street currently expects something about $140 billion of net income. And I'm at more like $100 billion of net income, gap basis. Excluding the charges, first quarter adjusted earnings per share would have been 96 cents. According to data compiled by LCG, blah, 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 NVIDIA data center segments at 39. Okay, companies said 29.8 billion commitments to have products manufactured. Okay, let me see if there's anything else. Kind of, the broader concern is that trade tensions. This is not my concern, but the market is overly emphasizing, I think, China negotiations when it comes to NVIDIA, where I think the elephant in the room is the hyperscalers. Okay, let's switch to Salesforce. Salesforce delivers an earnings surprise. So they deliver earnings surprise. They beat revenue. They raise their guidance, but the stock is down 6%. So let's see what this article says. This is an article about Brian Sozzi. Salesforce did something late Wednesday that most corporate America hasn't done earnings season, raised its guidance despite numerous economic headwinds. Everything went well for us in the quarter. We had bookings go well, revenue went well, and currency went well. Salesforce, the co-founder and CEO Mark Benioff told Yahoo Finance, we're just seeing incredible results everywhere. The company said its data cloud and AI businesses are hauling in annual recurring revenue of more than $1 billion, up 120% year over year. It added that it has closed over 8,000 deals for its Agentforce technology, of which half are paid. I think this is pretty interesting story for Salesforce, Agentforce. Maybe we can dig into that another day. Overall, we are pleased to see Salesforce deliver 10 to 11% organic constant currency current remaining performing obligation growth per our calculations, while we do not see any meaningful deviations relative to our model in the results, JP Morgan analyst Mark Murphy said in a note. Here's what Wall Street more broadly is saying about Salesforce quarter. Okay, Guggenheim analyst, management talked about accelerating growth so much on the call that it felt like we were in the middle of the game of Where's Waldo. Since improving growth was left to metrics that may or may not drive the important subscription growth, and subscription growth continues to decelerate. For instance, platform business where Agentforce and Data Cloud reside did accelerate from plus 14 to plus 14 from plus 12 in the prior period, but growth for the clouds that make up Salesforce core business all declined materially. Interesting. Sales up 7% from plus 9, service same, marketing plus 4 from plus 8. This yielded moderating overall constant currency subscription growth of 8.7% from 9.1% in the prior quarter, so slowing growth. Interesting, except for Agentforce and Data Cloud. Okay. Key bank analyst Jackson Ader. Most of the headline metrics were either fine or even slightly disappointment relative to our forecast, particularly in the core. But there was a single exception: the current remaining performance obligations (CRPOs). Constant currency growth 11% out of estimates of 10%, driving current bookings growth of 16%, more than double our estimate. For us, coupling the better current bookings with the positive commentary on growth is enough to keep us optimistic on shares. Okay. Let me just quickly see if there's anything. Earnings rose nearly 6%. Revenue climbed 9 to 9.8 billion. 8 to 9.8 billion. Salesforce stock initially rose in exciting trading, then reversed down. Salesforce stock fell 6% in morning trading. A key financial metric, current remaining performance obligations. We talked about that. Let's look into this deal. Heading into Salesforce earnings release, CRM stock had retreated about 16% this year. In a move to boost its AI strategy, Salesforce on Tuesday agreed to buy data management software maker Informatica in an all-cash deal valued at $8 billion. Salesforce told analysts it expects the Informatica deal to be accretive to margins in 2 years after the deal closes, a time frame that UBS analysts says disappointing. Amid slowing revenue growth, some investors have focused on Salesforce's ability to improve operating margins. At RBC Capital, analyst Rishi Jaluria on Thursday downgraded Salesforce stock to sector perform. While we like the margin expansion story at Salesforce and the valuation is undemanding, deal risk as Informatica has tipped the scale-us. Okay, that makes sense. We're going to skip the technical ratings. Okay. Let's go to a bit more trade talk. China's magnet curbs risk halting Indian car production, industry documents. I think this is a really major risk for Tesla as well, that the market is ignoring. China seems to hold all the cards when it comes to rare earth metals, and this is obviously not so great for companies who rely on that, especially in the near term. New Delhi. Indian auto production could grind to a halt within days due to Chinese export restrictions on rare earth magnets, according to company executives and documents from industry groups, which want the government to lobby Beijing to relax the curbs. So I don't know why this couldn't happen to US automotive industry, especially the EV manufacturers. China, which controls over 90% of global processing capacity for the magnets used for automobiles, clean energy, and home appliances, enacted restrictions in April, requiring companies to obtain import permits from Beijing. Though a response to US President Trump's tariffs, the export curbs will impact automakers globally. And Indian companies say a disruption in the world's third largest car market is imminent due to rapidly depleting stocks and the onerous process of obtaining new supplies. In a meeting with Commerce Ministry officials last week, the Society of Indian Automobile Manufacturers and industry groups said inventories at auto part makers are expected to run out by the end of May, according to an unreleased document seen by Reuters. Siam was seeking the intervention of Prime Minister Narendra Modi government to help access magnets held at Chinese ports since April 4. Starting at end May or early June, auto industry production is expected to come to a grinding halt, Siam said in the document, which was presented during May 19 meeting attended by executives from Maruti Suzuki, Mahindra and Mahindra, and Tata Motors. While China has cleared exports for some magnet producers, including Volkswagen suppliers, 3 auto industry executives told Reuters they fear strained relations between Beijing and New Delhi could hurt India's chances of getting quick approvals. The company officials asked not to be identified. When asked about the magnets restrictions' impact on India, China's embassy in New Delhi said it was actively facilitating and streamlining compliant trade in accordance with legal and regulatory requirements. China's lawful imposition of export controls on these items aims to better safeguard national security interests. Did not respond to requests for comments. While rare earth magnets are crucial components for electric vehicle motors, they are also required for parts like power windows and audio speakers used in traditional cars. Interesting. And though the measures imposed by Beijing are meant to focus on high performance exports, shipments of low end magnets are also being held up at ports due to confusion around implementing the restrictions. China's exports of permanent magnets fell 51% year over year to 26 tons in April, the first month of data following the curbs, customs data show. Yeah, so this is very material. India's other sector imported 460 tons of rare earth magnets, mostly from China, in the fiscal year ended March 31, and expects to import 700 tons worth $30 million this year, according to industry estimates. Though the cost of imported rare earth magnet is minuscule in vehicles, risk in vehicles cannot be manufactured, even if we are short of one component, CM and Ahmed said. So this is the chip shortage all over again. Indian companies are worried by the complexity of an import process that requires approvals from Indian ministries. Okay, we covered that. Next, housing. Let me take a breather. All right. Housing contract activity dropped sharply in April. So we're gonna do some let me see what else we got here on. Okay, so we're gonna do some macro and then EVs, then a little bit of Tesla. Housing contract activity dropped sharply in April as volatility and high rates reigned. Home contract signings took a nosedive in April as high mortgage rates and tariff uncertainty weighed on prospective buyers. The pending home sales index fell 6% in April from a month earlier to 71.3, according to the National Association of Realtors. Economists had been expecting a more modest 1% decline. A reading of 100 is equal to the level of housing contract activity in 2001. Year over year, pending contracts were down 2.5% nationwide. Contract activity was down month over month in all parts of the country and decreased year over year in all regions except for Midwest. The latest drop in activity comes even as home buyers have more to choose from in most markets, according to Realtor.com. Nearly 1 million homes were active on the market, up 30% from a year earlier. But prices are still near all-time highs and mortgage rates remain well above 6%, making the market unaffordable for many. At this critical stage of the housing market, it is all about mortgage rates, our chief economist said. Despite an increase in housing inventory, we're not seeing higher home sales. Lower mortgages are essential to bring home buyers back. Last one, I think, so lower mortgage rates are essential to bring home buyers back, but what matters here is how much lower. If the Fed cuts 25 basis points, yields go down 25 basis points, is that going to be enough? Or are we going to need, 1-2% lower mortgage rates? Time will tell. Last month, house hunters contended with particularly volatile mortgage rates and fresh economic uncertainty stemming from President Trump's Liberation Day. Investors panic in the aftermath, etc. We all know the story. Homes usually go under contract a month or two before they're sold, and while not all contracts close, pending home sales are typically an early indicator of housing market activity. Okay. There's also a bit of an increase in cancellations, I think. But okay. Fed's Goolsbee. If tariffs are avoided, policy rate can come down. Chicago Fed President Austin Goolsbee on Thursday said he believes that if big tariffs could be avoided, either through trade deals or otherwise, the central bank could likely cut interest rates, given the underlying strength of the economy and the direction of inflation. Goolsbee did not comment directly on a ruling Wednesday by a U.S. trade court that blocked many of the tariffs put on by the Trump administration, including the aggressive Liberation Day levies from April 2. Before that date, Goolsbee said, the labor market was stable and inflation was heading towards the Fed's 2% goal, conditions that would allow the Fed to bring the policy rate down to its long-term settling point, well below the current 4.25, 4.5 rate. All right, let's switch to the EV market. Interesting news coming out of CATL. First EV with CATL's Choco SCB swappable batteries started deliveries in China. The first 1,000 Chang'an Ocean 520 EV sedans equipped with CATL's Choco SEB swappable battery were delivered to a Chongqing taxi operator. The Ocean 520, I'm killing all these words, priced at 166,800 yuan, offers a 515-kilometer CLCT range and a 100-second battery swap time. 100-second battery swap time. I guess that's the most important news here. This is really interesting because this is a technology that Elon Musk had kind of claim that it wouldn't work or that the customers don't want it. In the US, maybe that may be the case for whatever reason. But in China, multiple EV producers and battery station companies are banking on this technology working, and they're scaling. And now you have CATL getting into the business as well. CATL plans to build 30,000 swap stations across China, with Chongqing being the first city to adopt them. So that's amazing. And 100 seconds is a minute and a half. That's quicker than putting in gasoline into your car. So this could be a very major technology in the future. I guess we'll see. I think Tesla bulls, some long-term Tesla investors claim that the technology doesn't work, that the physics don't allow it, etc. But they're making it work in China, so maybe the physics are different in China. All right, let's move on. German car makers in talks with the US over possible tariff deals, sources say. Germany's leading automakers are in talks with Washington over a possible import tariff deal, seeking to use their US investments and exports as leverage to soften any blow, three people familiar with the matter said. BMW, Mercedes-Benz, and Volkswagen hope that the talks within the US Department of Commerce could result in a deal in June, one of the people said, but this would be contingent on companies pledging substantial investments that would sway the US administration. Okay. The automakers have signaled some plans for US expansion since the Trump began making tariff threats. Mercedes-Benz will add, see, like a lot of these plans are kind of changing. Announcements are going to change. For example, if the court ruling prevents Trump from increasing tariffs, then all of these plans could be canceled. And none of these companies are going to actually make a material investment in the US until everything is settled down, which is going to take a year and a half. And then the question becomes, what if Trump loses the next election or the Congress loses the midterms? And now what happens to tariffs? So lots of uncertainty that's kind of weighing on investment capital, capex, and GDP in a way too. Export credits. Under the proposals being discussed, German car makers would get credits for cars they export from the US, which could then be deducted from tariffs, a second source said. Volkswagen, Mercedes-Benz, BMW declined to comment. US is the fifth largest source of car imports for the EU after China, Japan, Britain, and Turkey. The European Commission, which oversees trade policy for the 27-nation bloc, is stepping up efforts to secure a deal with Washington. Brussels has asked the EU's leading companies and CEOs for details of their US investment plans as leverage for negotiations. Still, the Commission is also preparing for retaliation should talks fail, with motor vehicles and motor vehicle products among the highest value items on the list published by the Commission earlier this month. All right. Next. Elon Musk is now leaving Washington quietly. Elon Musk is now leaving the nation's capital quietly. The Tesla CEO confirmed his exit from Washington, D.C. in a post on X Wednesday night, saying that his scheduled time as a special government employee is coming to an end. I would like to thank the President Trump for the opportunity to reduce wasteful spending, Musk wrote on X, referring to his work with the Department of Government Efficiency. The post came one day after telling CBS in an interview that is scheduled to air in full this weekend that he was disappointed by the price tag of Trump's big, beautiful bill that could produce over $3 trillion in new red ink if the bill is passed. The bill increases the budget deficit and undermines the work that Doge team is doing, he said. White House advisor Stephen Miller said on X that the bill would in fact reduce deficit and that Doge cuts would have to be formalized in subsequent legislation. The world's richest man is making his views on a variety of subjects well known in Washington as he returns with attention to many businesses, including Tesla and SpaceX. He told Bloomberg last week that he's going to do less political spending in the future, saying, I think I've done enough, etc. His ongoing feud with OpenAI, Sam Altman, even became part of Washington conversation after the Wall Street Journal reported that Musk pushed back against a deal announced last week that has OpenAI and other tech giants building on AI data center in Abu Dhabi. The Wall Street Journal and the New York Times reported that Musk tried to include his AI company, XAI, in the deal, but that didn't happen. I'd be interested in why that didn't happen. That would be, I wonder why that didn't happen. This is a 2015 picture. good old times. Musk also made it clear this week that he's returning to the office so he can focus on his businesses, back to spending 24/7, blah, blah, blah. Tesla itself is gearing up for crucial robotaxi trials in Austin, starting at the end of July. Musk, I think this is supposed to be June 12 now. We'll see. Musk and Tesla have bet the future of the company on self-driving and able to force cars to perform robotaxi services and cybercab, etc. Okay, and then one announcement by Drew Baglino, who used to be the head of Tesla Energy Batteries and other at Tesla. Moving on to his new company. Today, I'm excited to announce Heron Power has closed a $38 million Series A led by Capricorn, which participates a bunch of companies, and also JB Strobel and Zach Kirkhorn, ex-CFO, and I think JB is on board right now, but number two previously before that at Tesla. And also JB was Drew's boss. So Heron Power's first product, the Heron Link, replaces legacy transformers and power converters by directly connecting rapidly growing megawatt scale solar, batteries, and AI data center to medium voltage transmission. Okay, rapidly growing megawatt scale to voltage transmission. Okay. Our customers benefit from a higher power density and efficiency, greater reliability, lower cost, domestic manufacturing, and reduced project timelines. Over the next 12 months, the Heron team will be heads down in details, engineering Heron Link. We plan to complete first field demos in mid-2026 with fast following customer pilots. Okay. Curious to see if Drew runs on Elon time or if they actually deliver by mid-2026. So fast following customer pilots, and then maybe scale looks like 2030s, I'm guessing. Over my 18-year career at Tesla, I was privileged to experience firsthand impact of a talented team, laser focus, clear objectives, high barrier to entry industries, high barrier to entry into automotive energy storage. I'm honored to be in the position to do so again in the small and committed team at Heron Power and the backing of inspiring to invest in individuals. Goal is a responsive, repeatable supply with robust hardware that propels energy project, data center, and utility developers faster and further toward an all-electric future. Come check out, etc. for open roles. Okay. All right. Let's see if there's any material changes in the market. NVIDIA is down now up 4%. Tesla is up 1.3%. We talked about Salesforce down 5%. Uber is down 4%, possibly because of robotaxi headlines by Tesla. And I mean, except for NVIDIA, everything else is pretty much mixed right now. Utilities are up. We're mixed over here. Okay. All right. Let me see if there's any questions. You can also leave some questions on X or on YouTube. I see them as they come in. And then we can have a question answer session at the end of these and then take it from there. Thank you very much, everybody. I hope everybody's liking this new format. Let me know in the comments if you have any feedback. If you want to correct any information, I'm happy to do so in the next episode. And I'll chat with you all next time. Take care.